Asian markets, all of them looking good, looking like there could be some gains.
Support is a zone, 24,800 to about 25,000.
Mindtree to an overweight, and they've raised the target price on L&T Mindtree to 6,900.
0.4% up on the Nifty Index, 25,118.
Metals and IT. I think these are the two places to hide.
We came out with a new coin that Har Ghar Se Har Dil Tak well spun.
The government has approved our project for close to 3,400 crores.
The bear attack on Dalal Street continues.
State plus central government investments, they have been quite strong in the last couple of years.
I've never been outside Senegal, where wearing sari and learning the dance of Bollywood.
The Nifty slips below 25,000 and the Midcap Index loses near 1,300 points.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
You know, it looks like we're saying the same thing over the last couple of days, over and over again, which is the fact that we're deep down in the red once again. This is Closing Bell. And of course, the day that with the snapshot of the day so far, it was so different depending on what part you looked at, because there have been at least 3 different episodes playing out. And I think we're in the 3rd or the 4th one, depending on how you want to count things. This is, of course, the last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. There have been at least 2 attempts, right, when markets have seriously tried to pull back and recover from the lows. The last one was just about 30 minutes back. But alas, it's not lasted, and we're virtually at the day's low once again.
Absolutely, and I think there's a fair amount of disconnect in global markets as well, because Asia, our neighborhood, was actually doing well. And the Hong Kong Hang Seng that put on more momentum. Japan was up about 2%. But if you're looking at Europe, there's a sense of caution in the market. US futures are also lower. And, you know, it's very eerie. It is October 7, so there's all kinds of sort of updates here and there. Reuters put out, a story on some potential sort of rockets being fired, but it wasn't apparently clear whether this was towards Israel or not. All this confusion has led to an uptick in oil prices. Let's not take our eye off the ball over there, because Brent now, after having rallied 9% last week, is up another 1%. It's at the doorsteps of $80 a barrel. So we have our own issues, and then these kind of headlines don't make it any better. Look at that, 1.5% now, crossing 79 on Brent, and NYMEX is rallying even more after an already very, very strong move last week. So yeah, local and global, we have enough to deal with.
I mean, no, absolutely. And, I just want to put out that intraday looks like it's just been basically one move, right? I mean, it's just down and down and down. But actually, it's not been. There have been bounces along the way, at least one meaningful bounce along as well. So the day's high, there you go. This is the 3-part move that I'm talking about. The day's high was after opening made at 25,143. Then the market sold off 345 points from that high. Then there was a 173-point bounce from the lows those lows, and then from that 173-point bounce, we're seeing another 211-point sell-off, which is the current one. Actually, it's not 211, it's about 240 now, because prices are changing. So it's like a 3-part movie which is playing out. We're off the lows, but of course, I mean, off the highs much more significantly. FI is selling. The general feedback is that there is a fair bit of FI selling across desks. And we'll get the number once again. Thursday, of course, was that 15,000 crore number. Friday was large enough, but not as large. And I think we'll brace for today. Government stocks, CPSC, PSU banks and energy stocks are some of the top losers across the board. And this is something at the margin, right, which I picked up, that, we're talking about flows and how much more selling. That is the question. Now, there are various ways to look at this, but at the margin, one argument I've heard that over the last actually US after last Friday and Japan over the last 3 trading sessions, they've become much more attractive. So if you want to fund, your exposure to China, and I'm not talking about long-only funds, I'm talking about hedge funds and fast money. If you want to fund your exposure in China, where do you take it out of? US economy seems to be strong, as the jobs data indicates. So they're cutting into a very strong economy. So it's the best of both worlds. And Japan, of course, has done a complete 180-degree about face after the new prime minister essentially said that, they'll keep interest rates low, etc., etc. It's a flip-flop, but markets like it. So I think that's the other sort of, it's a nuanced point, and it's not long onlys, and it's more fast money and hedge funds, as I said, but that's something I heard. And of course, the 10-year yield in the US has hit 4% as well. That's, of course, it's tagged to the rates right now, which are coming through. We left off at 3.93 on Friday and has gone past 4%. So just a few things to watch out for. Here in India, the RBI meeting is on Thursday, and I think it becomes a little more important. No change expected. But our own citizens' monetary policy, which Lata conducted, that indicates that panel basically voted for a change in stance. So we'll see if the MPC does something to that effect or not. I think with markets like this, it assumes a little more than usual importance. Rima.
Well, Asia was decisively higher this morning. So Nikkei, Taiwan, Korea, Hang Seng, all of them rallying anywhere between 1.5% to 2%. And there was this interesting data point that I picked up. They're saying that one of these Chinese ETFs has gone up 15% from the 30th of September, which is when the Chinese markets were shut for the Golden Week holiday. Remember, China reopens tomorrow, and the Chinese ETF is up 15%, which suggests that, perhaps tomorrow we're going to see some fireworks when Shanghai opens up for trade. So that's something that the street will be tracking very closely. But I think it's the, the broader markets and the way it's collapsed. So last week, the Midcap Index and the, frontline indices were down a similar amount, 2.5%. But today, you are seeing accelerated selling pressure in the mid and small cap universe.
No, absolutely. And since you mentioned China, Rima, again, just reminding all our viewers that tomorrow is also this apparent press conference where the government could be announcing more clarity and more details on the so-called stimulus package that everyone's awaiting. So the markets will get back after the holiday, and then let's see what are the specific announcements that come in. So it's a really important market day tomorrow in China. But yes, coming here to the broader market sell-off. So let's see what's going on. Two very clear trends. I thought I'll pick them out quickly for you. One is capital market plays. All the stocks that have gone through the roof because the market's been going through the roof. There's a fair amount of unwinding going on over there. So look at IFL Securities. That stock's down almost 10%. Angel One has lost quite a bit of ground as well. Okay, by the way, before we talk stocks, I think you can see the first glimpses, the visuals of the IBLA jury meeting that's taking place right here in Mumbai, and our colleagues Ritu and Manglam there. Baba Kalyani, he's the chair this year. And of course, you will be soon getting to that glittering award ceremony towards the end of the year. But right now, I think Manglam's managing to pull him on the sidelines and get a conversation going on the overall sentiment, how India Inc. is placed. Manglam, if you can hear us, take it away. No, I think Manglam's going to take another couple of minutes. So it's a star-studded panel to pick out the best of the best when it comes to excellence in corporate leadership. And yeah, I think Manglam is finally getting into that conversation now.
To getting your insights on the India Business Leader Awards. But speaking about business itself, if you could, start by telling us how the business environment currently is, how has demand panned out, and what your prognosis for the next couple of months is.
Business environment is generally good. The CII survey just came out last week, I think, of 200 CEOs in India. And everybody said they're looking forward to a pretty good year, good growth. So I think overall things are good. The Indian economy is doing well. Yeah, there are a lot of, red lines all over the place with the Middle East crisis going on, the wars going on. The Russia-Ukraine crisis seems to be a never-ending crisis. But otherwise, yeah, things are good. The US economy is doing well. Europe is a little slow. India is doing well.
Right, India is doing well, but the global economy still has a fair amount of issues, demand concerns, etc. We did get some of the numbers from the North America Class 8 trucks this time around as well. While sequentially there have been signs of improvement, they're still far from the best that they've been, right?
See, there's a misunderstanding in the media about Class 8 trucks.
Yes.
I think Class 8 trucks in America are doing quite well. All right? There is a cycle of vehicles in America based on which year the emission norms come in. So 1 year before the emission norms, you will see a big spike in the vehicle demand, which is probably going to happen next year. But right now the demand is good. It's running at 320, 330. Everybody is running their productions as per plan. There are no surprises.
Right. No surprises. So then what is it that you can talk about in terms of your utilizations, your margin outlook for this year? Raw material environment has been fairly volatile.
I can't talk about that because we are in a quiet period. Our results are going to come out, so I'm sorry. I can't discuss my company.
All right, we take that point. But, you know, apart from your company itself, an ancillary regulatory clarity that the street is awaiting on is what happens with the Nandi infra or the Nandi corridor. The buzz on the street is that something is in the offing. Have you heard something?
It has nothing to do with me.
Nothing to do with you. All right, take that point. Thank you so much. So that was Mr. Baba Kalyani. He is the chair of the jury of India Business Leader Award. So we'll hear more from him shortly.
Mangalam, thank you very much for that. That's an interesting chat with Baba Kalyani. And of course, Mr. Kalyani is also chair of the jury. So that will be sort of interesting to hear from. And of course, as the jury deliberates and picks out the winners, etc. The jury meet, of course, is about to begin shortly, a bit from now. So some of the flashes, of course, at the bottom of the screen. Let's just go back to the market as well. We're down about 260. 24,747 is where we're at. Mitesh is with us. If you can go across to him. Mitesh, good afternoon. Good to have you here. 24,750 or so on the index. What next and what are the trades? What's the way to trade this?
Prashant, good afternoon. One, I think, we had a low of 24,750, which was made on the 9th of September, and then we had this rally to about 26,200. We're back there. The structure is looking like we will eventually break below this and go down. Now, we've fallen a lot. So let's first talk about the upside reversal point for me, which is 25,400, which means that till the market crosses 25,400, I'll be looking to sell on rallies. And two, I think, I'm looking at much lower levels. As I said, 24,750 is likely to be taken out. The first support for me comes in the range of 24,350, 24,200. Maybe we'll look at lower levels eventually. But I think that's the which I'm looking at as a minimum that the Nifty should test. So same negative, suggesting sell and rally because we've had about this is the second week actually. We have had about 7 or 8 days of decline and we've dropped by about 1,500 odd points. So I think now is not the best time to initiate shorts. You can trade via put options, but on rallies and pullbacks, I would want to sell.
Okay, all right. Mitesh, got it. Thanks very much for the calls. We'll come back to you in a bit and let's just see how this plays out over the next hour or so. Let's quickly actually move on and look at some data that Hormuz has been putting together on the market fall. Hormuz, it's been really painful. I think 5 straight days and counting. What numbers do you have?
Painful indeed. It's the 6th day of the fall, and it's not something that it should come as a surprise, the 5%, 6% correction on a benchmark index from the top, but the ferocity of the fall is something that is concerning, right? It's a 6th session from the highs of September 27 to the lows of today. The Nifty is down almost 1,600 points, and the Nifty Bank, all the gains that it made starting the 11th of September till the high of 54,467 that it had made on the 27th of September, it's down almost 4,300 points, reversing all those gains and then adding some more to that is the Nifty Bank. Now, the broader markets have been feeling the pain as well in equal proportions. The Midcap Index made a top on the 26th of last month. That's down 4,000 points as well. The Small Cap Index had topped out even earlier, as early as the 6th of September. And since then, the index is down 1,500 points. Which are the top losers on the Nifty? Of course, in terms of percentage-wise, of course, it is Power Grid, Axis Bank, but the stocks, the index heavyweights are the ones that are leading the charge on the downside, be it Reliance Industries, L&T, HDFC Bank. All of them are down anywhere between 8.5% to 9% since that top of the 27th of September. Now, even from the broader market space, if you would go, there's stocks like Mahindra and Mahindra Finance, Godrej Properties, Suzlon also has a mention here, RVNL, a high-flying railway PSU, down 13% from the 26th of September. Escorts, Kubota and Vodafone Idea as well, finding a mention. Vodafone Idea, fresh 52-week low in today's session itself. And the small caps, they are having a greater pain. 3 stocks down almost more than 20 to 25% from that September 6th top. And Raymond and ITI complete that list of top losers within the small cap space. Now even 15 stocks within the mid-cap index are down over 10% from the peak, and the small-cap index, almost 31 names are down over 10% from the peak. Tells you the kind of pain that we are witnessing in the broader markets today.
Well, after the gain has come the pain. Thank you very much for that. But Mangalam is now in conversation with Sunita Reddy of Apollo Hospitals. Let's cut across.
Seek partial exit from that while holding a fair amount of stake in the company, so that gives you some capital to perhaps fund back into your own growth businesses?
No, we will not exit that business at all. It is not our intention, and I think we should wait for the quarter to come back with a concrete answer on the timelines.
So as of now, it's only IFC which is exiting and not you?
No, we're not exiting. No.
All right. And as far as your own acquisition plans are concerned, what are the assets which, in what part of the country are you looking at in some sort of assets and, increasing your footprint?
Definitely we're looking at Bombay, where we will definitely have 2, and Gurgaon is where we're already there, opening out in Pune in 25-26, opening Kolkata, also in Gachibowli and Hyderabad. So 4 hospitals coming on stream within the next 18 to 20 months.
And final question before we let you go, a word on the regulations. I mean, there is that fear of standardized pricing for hospitals. That's point number one. And secondly, the PM Yojana has been increased to all senior citizens upwards of 70. So how does that change things for you?
I think the PM Yojana doing something for senior citizens is a wonderful initiative. Very much needs to be done. How does it change for us? I think that for us, we were always looking after senior citizens, so not much impact on us, but we need to continue to focus on senior care. In the other part, I think we're all good.
All right, we take that point. Thank you so much, ma'am. With that, from hospitals, I'll toss it back to you, Ritu. You have someone who's talking about all things infrastructure.
Well, yes, I do. A very important voice from the infrastructure sector. In fact, Mangalam, Mr. Shankar Raman from L&T. Mr. Raman, let me just start by asking about the first quarter GDP numbers. Manufacturing sector, although solid at 7% growth, was a bit lower than the previous quarter. There was a bit of a decline there. I just wanted to start by understanding how the economic momentum is going for you, because, manufacturing really is representative of the economic growth. How are you seeing how conducive the environment is, for the growth of a company like L&T now?
I think the potential remains. There has been a bit of a disruption on the pace of things, and that's to be expected when you have such a large election. Yeah. Various combinations, political combinations, and all the consequences thereof will rub on all the initiatives that the government will take. But the good news is, I think, the present government is still talking about structural reforms, which I think is core to growth. I mean, we can keep growing the economy, but without a strong foundation, I think the growth will be weak and vulnerable. So I think it's very important that the structural reforms that the government is talking about actually gather space. To my mind, the GDP or the sectorial growth rates is a byproduct. I think if you have the right policies and right enablement, I think India is raring to go.
Speaking of India, 60% of your orders come from here, 40% from outside. But in that 40%, given what's happening outside with the geopolitical tensions rising, especially in the Middle East, an important area for you, how has business been impacted?
I think Middle East has been consistently buoyant. There is a tendency to monetize the oil and gas assets and to use the proceeds of that to finance their transition. So I think Middle East is in a way firing on 2 engines. One is to make sure when the oil prices are still attractive, they extract as much. And second is to use the proceeds and to build solar capacity, downstream applications, etc. Fortunately for us, I think the areas that Middle East is investing are the areas that we have over many years done well in India. So the skill set is there. It's just a question of ability to ramp up the resources and be able to execute projects on a much larger scale. Typically, as compared to Indian opportunities, the Middle Eastern opportunities is 2, 3, 4 times the size. So ability to manage scale to very tight timelines is something that is required. We have been doing well so far, and we hope this trend will continue. And if India were to pick up pace, which at the moment I would call it as slow and steady, then we would have 2 hares running.
But no impact of what's happening in the Middle East with regards to Israel and Iran. No impact on your order flows, you believe?
I think Middle East has been taking a very interesting stand in all of these conflicts. I think if you had noticed, they've been advising peace. They've been advising restraint. I think Middle East, the way they are positioned economically, have got a lot to lose if they take very strongly sides. I think there is benefit to be neutral, or at least sound neutral, and that's what I think Middle East is doing. So that's good news for us because they're not
about 30% already. Could you exceed, what the number you've set, or do you think perhaps that could be undershot because of what's going around globally in the macro environment?
See, it's a very big number. The base number is very big, and we're aspiring to keep growing that by 10%. So it's a fairly tall order that we're pursuing. But at the moment, the run rate seems to suggest that we are headed towards that direction. But in project business, the orders are very lumpy. So a couple of orders slipping between quarters could make a whole lot of difference to the percentages. So the effort is on. Time will tell.
All right, Mr. Raman, and we wish you the best with that. Thank you very much for your time here today. Thank you. Thank you.
All right. Well, interesting commentary there. Ritu in conversation with the top boss at L&T, sounding fairly optimistic in terms of a recovery from here on. Says India's doing well, Middle East is doing well, looking for that additional booster shot. By the way, by the time Ritu had that conversation with L&T, just pull up the markets. A massive recovery is what we're seeing from the low point of the day, and the bulls will feel good with this sort of a close. And if we can close around here, the Nifty Bank has recovered 1,000 points. Yes, I'm not making a mistake. The Nifty Bank has recovered 1,000 points from the low point of the day. The Nifty as well is up close to around 220 points from the day's low. And at least as of now, you've had this bit of a pullback, but we've seen that all through the trading session. The point is the bulls will want to end somewhere around here because these bounce backs actually are getting sold into. And one stock that I pointed out earlier today was Infosys. On a day-to-day basis, that stock is not running away, but it's doing that gradual 0.5% to 1% move. Even in today's trading session, it's holding one end up. In fact, tech has been the place to really hide in because that one's up close to around 0.3% while the markets are down. Dipan Mehta, Director at Lexar Equities, joins us on the show. Hi, Dipan. Good afternoon and good to see you, Ben. Well, you'll have to say that maybe you're the good luck charm, Dipan. The markets have seen a good recovery in the last 10 minutes or so. But I wanted your comment on tech. Tech is seeing a good, has been a place to hide. And Infosys in particular, it seems the street is sensing something. It's almost at a 52-week high.
Yeah, Nigel, good afternoon and thank you for having me on your show. Well, I may be the good luck charm, but my view is slightly bearish on the market. And we expect more pain. Actually, there's a lot of froth in the market which should get cleared. If you believe in the long-term, if you want a long-term multi-year bull market, this has to correct significantly from these levels. But when that happens, it's difficult to say. Coming specifically to IT, I think that it's a safe bet at this point of time. We are seeing the first signs of slowdown in the Indian economy. The consumption also is flagging. Valuations for a lot of other businesses, domestic focused, are on the higher side. So I think that this particular trade playing out is a flight to safety. And there's a hope that, again, the management commentary may be positive on the IT companies, although the numbers may be pretty much stagnant. So some amount of pre-result buying may also be underway.
No, absolutely. More pain. That's essentially what you began with. But as Nigel pointed out, I mean, there is a big recovery which has been, which is underway. And I think the high that the markets made in this leg, in this recent leg, is 24,923. And very quickly, we are ceding ground now, 24,885, 890. So not lasting, although it's a sharp one. And I think the second big bounce of the day, smaller as compared to the mid-session bounce, but still. And it's coming. I mean, it's coming as we speak. Just 120 down on the day now. So that's a 0.5% cut for the market, which I think is something we can live with. At one point, we were down 300, so it's all relative. Deepan, what would you do in a market like this in terms of buying or selling?
So I'll share something which we are doing all the time, is that we've created a screener for figuring out stocks which are down beyond 30% from their peak. And there are quite a few stocks. They're in the defense space, they're in the railway space. Some of the capital market focused companies also are there in that particular list. And looking at the valuations, I think at some point of time, we will reach a situation where the stock has a good quality business stock has corrected 25, 30, 40%, and valuations are reasonable, which I mean reasonable, it means price to earnings growth of less than 2 times, maybe like 1.5 times or so. And then keeping that list ready, I think a lot of stories have already been discovered. So just a matter of trying to time the market a little better and trying to get into stocks where there's a decent amount of margin of safety.
Is talking to the management of Asian Paints. So I just want to cut across to that.
Of where it is going, but we've seen some inflation definitely in the Q2 to that extent, and we feel that possibly, given the whole geopolitical scenario which is there at this stage, very difficult to really peg it whether the inflation levels would come down and so on and so forth. We are already seeing how the crude prices are going up and up to that extent. So overall, we feel that I think we'll have to kind of really take a balanced view in terms of where the kind of raw material prices are going. As I see it, we would like to kind of keep it constant in terms of going forward to see that we are able to stem the demand and give demand a little bit of a upswing as we kind of go forward.
So margins between 18 to 20% hold, right?
So we are trying to hold that definitely as we kind of go ahead.
Okay, and typically we speak about the large competition from a conglomerate, but recently, AkzoNobel globally has spoken about reviewing their India portfolio. One is not sure whether they want to sell out their Indian decorative business or they are looking at acquiring some of the Indian companies. Either way, there is consolidation. If they're willing to sell out, would you be a buyer? And if they're looking to acquire some, which do you think would be some decent assets?
So I think it's too early to say in terms of what model are they looking in terms of looking at whether they're looking at anything which is a joint venture or is a divestment. We are not very, very clear. But definitely I think there are certain parts of the business which are very, very interesting in terms of what is there. And as we see it, I think in a large industry with some of the smaller players, there is bound to be some consolidation which is going to happen, which is the trend what we are seeing.
So you would be interested?
Definitely some parts of it we might be interested depending on in terms of the overall environment, given the fact that we have a large share. In terms of what we are permitted, we don't know really in terms of it, but I think it depends on the contours of the real divestment in terms of how it takes place.
All right, and this will be the first Diwali where you have Birlas as competitors in the market as well. So far, what is your assessment of that been, and how do you expect this Diwali to be?
I think we are expecting Diwali to be as buoyant as it has been in the past. So we see actually there would not be any difference to that extent as we have seen in the last about 6 months to that extent as we go forward. I think it is, it takes a time to kind of build up a brand and start really batting to that extent. So for that moment, I think we are not really kind of concerned at this moment in terms of how the Diwali goes.
All right, take that point. Always a pleasure speaking with you. Candid Amit Singhal out there. Speaking about the second quarter being a little suppressed, trying to hold on to that 18 to 20% sort of margin guidance that they had given, but the headline is they are interested in AkzoNobel's business if it is up on the blocks itself. Awaiting competition from the Birlas this Diwali, but with that, I'll hand it over to you.
Thank you very much for that. So that's Asian Paints on margins, on M&A, and how they expect the festive season to be despite the increasing competition. Amit Gupta of ICICI Securities PMS is also with us on the show. Amit, Dipan was just telling us, okay, we'll get to Amit in just a bit. We need to slip into a very short break on that note. We'll come back and continue our conversation. The Nifty is above 24,800.
Welcome back. You're with us on Closing Bell. Well, let's move to our next conversation. Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities PMS is with us. Amit, good to have you on. So the much talked about correction is here, and obviously, it's a sense of uncertainty, and we haven't dealt with that in quite some time. We've had very shallow corrections every 2-3%, and the dip gets bought. Is this one a little different, Amit? What's your sense?
See, our sense is this will also be, the same course what we have been seeing so far. The intermediate corrections are coming. The geopolitical scenario is also, going haywire in between 2022 onwards we are seeing. The commodities that time actually started moving up, and then we saw the inflation started moving up, and then interest rates. Now the cycle is reverse. In fact, we have seen that the steel prices, they declined to 52,000 per ton from almost 65,000 per ton if you compare with the last year levels. Except gold, because gold prices are up because of the geopolitical scenario. We feel when the interest rates are getting cut, it happens sometimes that the markets move into some kind of profit booking because they performed before. But then the usual course, the corporate earnings, we feel gets better actually going forward. So that, encompasses the fact that it becomes a range-bound market. So we feel that 24,000 to 27,000 possibly within this range, broadly the market can consolidate. The only thing is that the Iran should not attack the Strait of Hormuz, because that is very important, because 50% of crude of India is coming through that route. 80% of natural gas of India is coming through that route. So if that is impacted, then I think this situation can go a little more worse. Otherwise, broadly, it can consolidate. It is more mid-caps which are seeing selling because they have been more overvalued. The large caps still are undervalued or at par actually with the valuations of the last 5 years if you see. And that is where the juice is there. It is not that we are completely out of. There are still sectors in the last 2-3 years which have not performed. For example, consumer, agri-related, textiles, sugar-related sectors, IT as a space. I think there is room where we can move into those sectors also now.
By the way, crude continues to surge. Now it's 79.6 in the morning. Brent crude prices were closer to 77.5, not even $78 per barrel. But now you are seeing that big spike in crude prices, and the street is watching whether the geopolitical tensions in Middle East continue to escalate or there is a little bit of a regional spread to it. Amit, there are so many individual stocks in railways, defense, which have fallen now nearly 30% from peak levels. Are any of them looking attractive to you? Because in your opinion, the Nifty, at the bottom level doesn't go below 24,000, and we're not too far away from that, 2% away at the index level. So which stocks would look attractive to accumulate after this 6-day sell-off?
See, from the PSU space, we have already booked substantial profits actually so far. We are there, certain weight is still there in the PSU space. But broadly, we feel that if you look at the public capex, it is broadly peaking out around 11 lakh crores. And the mantle now is shifted to the private companies to do the capex, because the RBI will start, cutting interest rates after some time, and then it is on the private companies to start doing the capex. So that is where I think some of the PSUs which had run up actually before time and the valuations actually were really high. So we have booked profits in those areas, and we are not looking to buy immediately because I think there may be time correction for some time also in that space. Rather, we need to look at, some of the private players in those areas which are emerging now and which have not participated too much and which has not seen that kind of money flow in the last many months. I think that is where the money will move. Money may still, you will not see that, you will realize after a while that the markets are here only and then money is not going out completely. It is more sectoral rotation which has happened finally.
Okay, by the way, just wanted to point out, Rima was highlighting crude, and guys, we must remember today is the 7th of October, right? It's the anniversary of the horrendous attacks that started the entire disruption in the Middle East. So I think there's a lot of uncertainty and edginess around what happens. Will Israel choose this to kind of make a statement? Will there be any fresh attacks or not? I mean, whatever is the chatter that's been doing the rounds, that's enough to get the market extremely worried. Look at the move on NYMEX right now. By the way, it's not just this. Look at the US 10-year yield. The yield was anyway soaring after the strong, solid jobs report. But the Friday close, it was around 3.8, 3.9%. Now, the US 10-year has topped 4% as well. And it seems, along with, of course, the jobs report in the US economy, there's a bit of a risk premium putting up. Whenever there's uncertainty, the natural tendency to gravitate to US bonds. And maybe there's a bit of that risk premium, the geopolitical risk premium that's getting added up. There you see 4% is back up there on the US 10-year. So enough, moving in global markets. And Nigel, enough moving, because we have Nigel with us in the studios now. But it's turning out to be a tough afternoon, Nigel. I mean, not much has actually changed.
Well, from the time I moved from the newsroom to the studio, the last time I was on air, the Nifty Bank was up 50 points. And it recovered 1,000 points from the day's low. In a matter of around 12 to 13 minutes, it's back down another 1,000 points. So that's the kind of volatility that you're seeing in today's trading session. But my gut is, on the Nifty, that 24,700 mark at least has been protected for now. And the bulls will feel that they live to fight another day. So you'll want to see that 24,700 mark odd getting protected on a closing basis. But Amit's still with us. Amit, we're looking for some ideas now. I wanted, there's a lot of comments on Hyundai, that the company is already listed in other markets, trading at a PE of around 5 times. They come here, they want 25, 30 times, or some on the street are not too happy. But from the auto pack, you like Maruti, I believe. Tell us more about that.
See, we like those ideas, where some negativity has been there for some time, right? And then the negativity is nearing the bottom. Because generally you see the stocks participating afterwards. For example, you look at Colgate-Palmolive, what happened? When Colgate was around 1800, 1850, the market share stopped actually falling further and the stock got double. Even in an FMCG space, it got doubled. Same, I think Maruti has underperformed. If you look at the auto index in the last 1 year, it has moved up by close to 55%, but Maruti has hardly moved up by 10-15%. And why it was not happening? Because the small cars, last 2 years we were talking about this, that small cars are not being sold. It is more the SUVs. So I understand the trend. SUVs have gained. It has reached to 60% of the total passenger vehicles. But still, when the money now, after the state elections, we are seeing that there is some consumer-oriented schemes which can start. And that is where the rural-related area, the mass consumption area, it can start participating actually, which was not happening before. So our sense is the small cars also can start picking up, right? That can create the bottom for the stock. If you look at the hybrid cars, which Maruti has, so there we saw that the taxes are very high in terms, if you compare with the sole EV vehicle. And we have seen after Uttar Pradesh, Karnataka is another state which is coming out to cut the hybrid taxes actually now, the taxes on the hybrid cars. Now, along with this, if you see now the EVs, they were not coming out with before because they had a view that they will come out with a more holistic approach because they want to give service even in remote areas. And now in the coming 6 years, they are going to come out with 6 EVs also. In CNG, every year they are gaining the market share by almost 1%. So that is where we feel somewhere in such kind of volatile markets only it happens that so the negativity in a particular sector or a particular stock, it gets bottomed out. We don't realize the money, the smart money goes in and the stock starts participating and then we start talking about this storyline. I think we need to look at this stock now and that is where we have taken it in our ACE equity portfolio.
Got it. What about Hyundai? In the next 2 days, we're going to hear the pricing. How interested would you be? Maruti over Hyundai?
So I will prefer Maruti. It's in the listed space, known actually. So our sense is it is getting little bit more aggressive in terms of EV. Then why not to look at Maruti only when it is available actually at a better valuation now?
Okay. Fair enough. That's autos. By the way, let's just pull up that Bank Nifty chart again because it's dramatic, the moves that have taken place. Like Nigel was pointing out, this drop it's happened in all of 10 to 15 minutes. Yes. Look at that upside down V. And it's a very, very steep one at that. So 1,000 points gone just like that in a blink. And that kind of tells us about the nature of volatility in the market today.
So watch for a big FI net sell number again today. That's where they have the highest exposure and that one is seeing a fair bit of selling as well. And today in any kind of bounce, it's got sold into.
Absolutely.
So, I think we'll brace for another large one today. Nimesh will get us further details, but I think the indications are there.
Absolutely. I mean, there's been absolutely no let up from the kind of heavy blows that we've had from the FII selling that's come through. Come in on this, Amit, because, we've also seen the updates. Let's leave the FII selling aside. Not much that can be done about that. But what sense do you get? There's a lot of nervousness as we gear up for Q2. A lot of updates are coming in. I mean, there's a big fight to raise deposits. But in that fight, some banks are sort of losing out on growth. How are you reading the updates, and what's your advice at this point on financials?
So financial also is interesting story, because we have been saying that the valuations of the banks, are fair because we look at the banking index. But in the banking index itself, if you see the HDFC Bank and Kotak, they have remained flat, which comprises 40% of the bank Nifty Bank actually. So this is where the other side of the picture has performed, and this side of the picture has not performed. There has been pressure because of LDR. HDFC Bank still holds around 103% of LDR, which can come down. That's why in the last 1 or 2 quarters, we saw the loan book also was getting sold. Now, yes, I understand the fact that deposit has been a problem, which this bank has been able to garner recently. NIMs were under compression because there was an expectation going forward there will be interest rate cut. So banking has taken in its stride now that interest rate cuts. They have not been performing these banks for the last 1 year. So they have taken in the stride. So value is there for sure. Value is there for sure. And I think we have to see now going forward. I know how it starts performing. Money flow is still absent. And that's why I think if we have to look from the index perspective, then the money flow can move into technology space. I think IT can be something which can surprise the market going forward because it was not performing before. And what we like, if you see from the global perspective, US perspective, we were talking about recession, which was getting heavy on the technology space. But our sense is the yield spread, the 10-year bond yield in US and 2-year bond yield in US. If you see the spread, which became negative in the month of June 2022, it became positive in the month of June 2024 now. That means the scenario of recession may not be there, and you are cutting interest rates, which is good eventually for the IT companies which are catering to mortgage, banks, or the BFSI space. So I think that's where the IT can be looked at. And these companies over the period have moved into ER&D space also, along with the products and services. And we have seen that the cars that we are using, the AI that we are using, the softwares were hardly 7-8%. Now it is 26%, and it can be 58-59% also. So these companies' demand is likely to remain. And I think that is what we can see going forward as one of the alternative where money can be moved.
So IT could emerge as a bit of a dark horse going into earnings season next week. TCS and Tata Elxsi both report their numbers on Thursday. This week only, Thursday. Yeah. Tata Elxsi and TCS will be reporting numbers, and they've gone through 2 years of an earnings downgrade cycle. Now, stocks have run up. Since the beginning of June, the Nifty IT Index is up 30%. Now, the question is that this rally was because of some PE, re-rating, investor positioning, which was deeply underweight, has come back to neutral. But from here on, earnings growth, upcycle, upgrades will need to support. We'll slip into a very short break. Before that, Nimesh is standing by. Nimesh, this has been a tough day to navigate so much volatility, particularly in the last hour. But the firm is, the trend is firmly lower.
Well, absolutely, Rima. And after a brutal last week, to follow up with another 2% cut across indices, massive selling in the broader market stocks as well. That shows that India is relatively now underperforming all the Asian peers. And there are a lot of reasons which are converging at a similar point in time. One, the rising crude prices. Two, there is still a lot of geopolitical risk which is hovering around. Three, even the earnings season is going to be quite muted. Q2 is generally seem to be quite muted as well. So even that earnings support is not going to be there, at least in the near term, and hence maybe that explains that we are underperforming it to some extent. But again, there is from a flow perspective, it looks like there is another day of aggressive selling by the FI. So the buy-sell ratio is close to 1:2 on the sell side. That's overall feedback, and there is selling across the board. So last week, what we saw was selling largely in the large cap names and the private bank stocks. That seems to be not the case. It looks like today is across the board selling. So again, the fact that the mid-cap index is down over 2%, there are some chatter as well that maybe there is some redemptions as well across some ETFs. So need to see whether that's really been the trend. But that explains the kind of fall we're seeing in the broader market stocks today. I guess two things to watch out for in the very near term. China reopens tomorrow, so that's a big trigger to watch out for, especially from a metal stocks point of view. And tomorrow we're also going to see the state election outcomes, and that's going to have a big impact as well. Sentiment though, but will have an impact as well on the market. So those things to track. But from a flow perspective, it's another down day and aggressive selling by the FIs.
Thank you very much for that, Nimesh. I think 40,000 was the FI selling last week, and today we could have another big sell number. But what about stocks? What have you picked up?
Well, so in terms of individual names, the first stock is Care Ratings. In a weak market, that stock is relatively outperformed. This last 10 odd days, the stock is up 10-11%. I understand the selling pressure from a leading PMS is largely over. Some good funds have bought as well, and hence looks like the supply overhang is out of the way, and hence that stock has outperformed of late. So that's the first name. The second stock is Hindustan Aeronautics, HAL. That's been constantly under pressure, and there is aggressive selling from larger FIs. I understand a very large long-only fund is an aggressive seller in HAL of late, and hence that stock is under pressure of late. So that's the second name. The third stock is High-Tech Pipes. Well, the stock has rallied a bit in the last few weeks and months, but now I understand the company is likely to raise funds via QIP very soon. So that's something to track in High-Tech Pipes. And the last is Kotak Bank. While the bank Nifty is under pressure for the last many days, there was a feedback in the morning, at least the sense was that there is buying into select bank names, and Kotak Bank stands out. So aggressive buying is what I understand, at least at a leading FI desk, as far as Kotak Bank is concerned.
Okay. Thanks very much, Ramesh, for that. Yeah, any bit of buying anywhere that's possible. I think the bulls will take it with both hands. We should actually pull up some stocks before we take the break. Look at Bajaj Housing and the price damage that's going on mid-caps today. 9.5%. That's the sort of slam dunk on this recent listing. Of course, it was a listing with great fanfare, but the cool-off has been pretty severe as well. Look at Ola Electric. It's down about 8.5% today. There are a lot of the railway names, RVNL, Aircon, Railtel, stocks crashing anywhere between 8, 9, 10, 11%. So it's a long list of losers, really, out there that we are looking at. By the way, there's some of the capital market plays. I was just getting to that before we moved into, the jury meeting of the India Business Leader Awards. Look at IIFL Securities, 10%. Look at BSE, 7.5% lower. Angel One, 6% lower. So, yeah, the gains are really coming off.
Bajaj Housing, people wanted it at 70 rupees. Those that didn't get allocated were very upset because the stock went to around 190 rupees.
Yeah.
It's now at a 52-week low. It's at that first tick that we saw. I think it was 136 rupees. So it's at that rate. So in case you thought that you missed it when it listed at around 136 and went the same day to 160 and the following day to 190, now you're getting it at the listing price. May not be very cheap, but that's the data point in terms of a price action. Well, we'll slip into a short break. You come back, we'll get you some buy and sell trades for a switch in the next few days. Our technical experts are with us. Well, the market's holding above the 24,800 mark, 7 minutes till the end of today's trading session. Just one stock I'd like to pull up, Heidelberg Cement. The stock was up, I think, close to around 12% in the morning. Now they put out a release that they're unaware of any such development with regard to a takeover from the Adani Group, and they do not comment on market speculations. The way the street reads it is that Heidelberg Cement at some point of time could get sold because of the global call that they've taken with regard to getting out of industries like cement, similar to what Holcim did. But for now, they say they haven't heard anything, and we heard this as well, this news-based reports, even a year or so ago. So we'll have to see how that goes. Well, Mitesh Thakkar is back with us. Mitesh, what are the calls you have for us?
Oh, Nigel, BTSC on TCS, purely because tech is showing some strength, and if there's a bounce back, I think that would be a sector which could rebound slightly stronger. TCS, I would recommend a stop below 42.50 and a target of around 4,300 on the upside is what I would look for. And on the selling side, I would go with a sell on a metal name. JSW Steel is something now which has just started to show first signs of profit booking. So take a STVT with a stop at 1,032 for targets of 1,000.
Mitesh, if you had a short position on the Nifty, you'll carry it or you'll close it?
I will carry it.
Got it.
Okay, so buy TCS, sell JSW Steel and carry forward if you have a sell on the benchmark index. Get into a break. We'll come back with more on the markets, counting down to the close too.
Welcome back. Okay, very quickly before we start ending the day and recapping the blows, here out a view from Gautam Shah for Goldilocks. Gautam is actually extremely cautious on the market and he thinks that this time around the correction could last a while.
If you look at the trading action of the last 7 days, what's really happened is that it's been an India-specific correction. You know, most other markets in the world, whether you look at US, Europe, or rest of Asia, actually have been quite well. So it's been a completely out-of-the-box kind of a decline for India. Overall basis, the market has got internally weak, and therefore the next few weeks will be challenging. I do believe that the metals index has the potential to deliver 25% upside from current levels over the next 1 year. So if you look at all the top stocks, you know, led by Hindalco, JSPL, JSW Steel, SAIL, Nalco, Tata Steel, the entire set looks very good and I think is likely to stand out. So if you're booking profits in some other pockets of the market, I think metals and IT is the place to be in. And in the IT, I want to stick to top quality. I don't want to go to grade 2, but I think Infosys, TCS, HCL Tech, Tech Mahindra, I think are good pockets to be in.
Gautam Shah sounding a little bit cautious, but a little bit positive on metals as well as on tech. Well, it's just a minute to go before we wind down, so let's get straight to that. The Nifty is down close to under 180 points. The Nifty Bank goes home with a sharp cut of around 800 points, but one would say not too bad. We were down 1,200 points at one point of time. The big losers today, Adani Ports got a sharp knock. Biggest loser on the Nifty, down 4.5%. BEL, the new entry into the Nifty, welcomed with a smack. That's down close to around 3.5%. From the time it's actually entered into the Nifty, it's seen quite a lot of selling in line with what the markets have done. Adani Enterprises as well pulled back. Coal India has now corrected more than 10% from the peak, as is the case with NTPC, Power Grid. Those PSU got a hard knock. HDFC Bank was one of the key dragging points in today's trading session. What did well? Tech and ITC. Infosys, TCS, ITC, they tried to fight for the bull along with new entrant Trent.
Absolutely, and that kind of was trying to work for the bulls, but not quite. Very quickly on the mid-cap screen, look at the advance decline ratio. 265 stocks advancing, that is it. And over 2,200 stocks on the declining side of the screen. Talk quickly about some of the key movers and shakers on the losing side. Bajaj Housing down 10%, RVNL down 9%, Ola Electric down 8.5%, RailTel, IIFL Securities, Zaggle Prepaid collapsing 8%, Dalmia Bharat 9%, Quick Heal 8%. I could just go on and on, but it was that kind of a day of extreme pain in the mid-cap and the small-cap market. The bell has gone. Let's try and end on a bit of an optimistic note. LTI Mindtree was responding well to some foreign brokerage notes that came in today. And CG Power is now trying to get into semiconductor design, not just OSAT facilities, with a small acquisition. That stock managed to stay up, and it stayed afloat on a day like this with a gain of 5.5%. Tough day for the bulls. A near 200-point drop on the Nifty. But the good news is the Nifty, with final adjustments, will probably end the day above 24,800. So the bulls trying to fight back. With that, it's a wrap on this edition of Closing Bell. Thanks for watching us. But don't go anywhere because all the market action continues. Up next is Markets Forward.